Hi, this is Larry Parman. I'm with Jerry Giles again today, and today we're going to talk about the estate tax. A little bit about us. We're with the firm of Parman Easterday. We're a firm that concentrates exclusively in estate tax and estate planning, along with elder law planning and business succession planning. And estate tax is a big topic because the law's changed so much recently. So Jerry, give us an overview of where it's been, where it is, where you think it's headed.
Okay. Well, it's interesting if you followed this at all, and you probably haven't. Prior to 2000, we had an exemption of about $600,000 if you died. That is, you wouldn't pay taxes on the first $600,000 of your estate. In 2000, we enacted new legislation that raised that to $1 million, and then over a period of time, it went from $1 million to $1.5 million to $2 million to $3.5 million that you could leave to your heirs without paying any taxes. In 2010, the estate tax went away entirely for 1 year. Then in 2011, it came back, but with a $5 million exemption, which continues through 2012. But effective January 1st, 2013, the exemption goes back to the $1 million limit it was at in 2000. So the estate tax has been all over the plate, and who knows what Congress is going to do in the future. All we know is what's projected at this time.
You know, historically, the estate tax has traveled an interesting road because I think it started in 1913, and it's been on and off and on and off, I think 7 different times throughout our history. And it's very controversial because people just don't believe that death should be a trigger for additional tax. But for the time being, we know that come January 1st next year, like you mentioned, it's going to revert back to $1 million. And I believe the rate is, what, 55% next year?
Yeah, essentially.
Yeah, so well over half your estate would be subject to estate tax in January of next year if there's nothing done. Now, it just looks like to us that 2012 is perhaps a once-in-a-lifetime estate tax planning bonanza. You want to talk about that a little bit?
Well, absolutely. If you've got any desire at all to shift assets to your children, grandchildren, or whoever it might be, without incurring tax, gift tax if you give it away, or death tax when you die, during 2012 you can gift up to $5 million and avoid tax altogether, whereas if you wait until 2013, pass away and leave it to those same heirs, they're going to be taxed at that 48 to 55% tax rate on every dollar over $1 million. So it's a once-in-a-lifetime opportunity to be able to pass wealth on to others without incurring any taxation.
And I guess since the most recent law unified the gift tax, the estate tax, and the generation skipping tax, we should mention the annual gift exclusion, which today is $13,000, correct?
Right.
And it's inflation adjusted, so at some point it may bump up again. It certainly will. But today, in addition to those big exemptions, you can make a gift of $13,000 to any number of donees.
Correct.
So it's $13,000 per donor for any number of donees. So that too is a very attractive estate tax planning option that shouldn't go unnoticed and might be an important part of your estate planning arsenal. So we're gonna cut this off and continue next time. This is Larry Parman and Jerry Giles. We can be reached at 405-843-6100, 6100. If you'd like to set up a complimentary telephone consultation, please give Vicki at our office a call. That number again is 405-843-6100. We look forward to talking to you next time.